My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is June 4th, 2026. And the good news is we've hit a key level of demand. We've hit a key level of support. The bad news is it took Bitcoin going down a little more to get there. So the good news is whatever retracement we've been experiencing for the past 2 weeks or so should be either done or very close to done. And that should also be true for altcoins. All right. So that's where I want to go with this episode. And I also want to tell you my next target for Bitcoin. Just as I kept saying, I'm not too focused on how it happens, but what I know with a high degree of certainty is that Bitcoin's next target is between 55 and 60K. That has been satisfied at around 61K. Now, I'm going to give you my next target for Bitcoin to the upside. If that all sounds interesting to you, then watch until the very end. Hope everyone's having a great day. Let's get into it. All right, Bitcoin, just as I said in the teaser, when we last spoke, it was around here, and I said, you know what? We came down a little further than anticipated. I still think 80K is untested, and it's likely to be retested before we come down to hit the ultimate target. I anticipate that we move up. And the price said, no, I think I'm just going to finish the job. All right. So again, the bad news is we kept going down a bit. But the good news is we have here in the price action on the 4-hourly time frame a convincing bounce. This candle right here, this one, let's see, that one right there that we experienced yesterday around 8 p.m. was very likely a break of structure. By break of structure, for those of you who don't watch the show regularly, or aren't privy to that terminology in Elliott wave analysis, it's basically, right, structurally you are in a trend, a downtrend, and in order to change direction you have to break it, and that's what I'm talking about. Yesterday at around 8 p.m. we may have very likely experienced a break of structure, and that break of structure looks like what? When you're experiencing a trend, a break of structure is basically a bounce in the opposite direction. We call it a bounce, and it's a big bounce. Typically it has a very long tail. If you're looking at the candle, it's one of those very long-tailed small body candles. Okay, so again, on the 4-hourly time frame, it very much looks the part. That this right here was our break of structure right into the demand zone, the green box that I set on this channel months and months ago. Okay, and months ago I set this as our demand zone for a few reasons, and I'm just going to go over that really quickly because I think it's important. The first of those reasons is simply, if you do the pattern analysis, you have a rising wedge. Rising wedges typically don't break up, they break down. So I'm like, okay, this is very likely going to break down, and the target is going to be the base of the wedge. That's, pattern analysis 101. All right, the second reason was more of an Elliott wave read, which was the following. On a very high, or on a higher time frame, I don't think this is a very high time frame. On a higher time frame, what you should expect for Bitcoin, and pay attention to this mauve corrective pattern, which I've had on this chart for many months. Those of you who watch regularly can attest to the fact that hasn't changed. I've had that read on for months. I've been saying for months, I even have a bet with one of you, that Bitcoin is going to head back up to the 100K level before capitulating down to this level. This target I've had for years. this is the tough part, one of the tough parts about technical analysis, right? There are so many different phases or aspects of analysis. There's high time frame analysis, like, I'm reading this years out, literally years out, and saying, okay, I know with a high degree of probability, Bitcoin's bear market ends in and around this level, around 40K, let's say. And then, it's a question of, all right, how does that look? What does that look like? How does that happen? How you try to answer that question. And then you try to, go day to day, look at the price and see the price action on a day-to-day, week-to-week basis and see, all right, what's going on? How is this going? All the while, your high time frame analysis is pretty much spot on, right? I've been saying for weeks, months on this channel, 55 to 60K, this demand zone, I fully expect Bitcoin to come down to this demand zone and meet it. That's exactly what it did. I couldn't tell you exactly how that played out, but that happened, okay? So as people, and I say this not to brag or anything like that, but if you're consuming analysis, it's important, I think, to be clear what time frame you're consuming. People sometimes make no distinction, and they're always they're thinking, oh, somebody called this, somebody called that, or, thinking every analyst is looking at high time frame, small time frame, medium time frame reads. No, some analysts are only looking at very small intraday time frames and reading and reacting like that. Others are on a higher time frame basis, making videos only weekly, if at all, right? So just take that into consideration when people are saying that the market's bullish or bearish. What time frame are we discussing? So on the higher time frame, again, I'm still bearish because this is my level of support demand on a higher time frame. In the medium term, I've reached my level right here in this green box. That's all I was looking for. And why was I looking for that? And I've kind of illustrated it here because I saw this, all of this, everything that we've put in since, let's see, sorry. Everything that we've been in since October of last year, to me, was clearly a corrective break, meaning it's a corrective pattern. It's not an impulse, not a pure impulse. It's just the first wave of a corrective pattern. So that's my A wave. And then once I get to a certain level, I'm going to put in a break of structure or counter correction, a B wave. That's exactly what you're seeing here. This right here that we've been putting in for the past 100+ days is the base of the B wave. Now that the base of the B wave is set, now you get the impulsive portion of the C wave. This is what takes us back up to this level. My target for Bitcoin, my next big target for Bitcoin is around 103K, between 103 and 104, okay? And this has been clear on my chart for some time for the reasons I've just stated. Now, on the smaller time frame, what's that look like? Let's jump back down to the 4-hourly time frame. I do believe this is a convincing break of structure. So we may experience something like this that starts us off. And if I'm correct, soon we get a move to around 75K, which is the first wave of that run to 103K. What else does this mean? Remember, Bitcoin is important insofar as it sets the trend for the rest of the cryptocurrency market. Trading this corrective pattern is kind of nuts. A lot of people are doing it, but trading corrections always incurs a lot more ambiguity and a lot more mistakes than usual, because corrective price action by definition is unpredictable. And here is case in point. the base of this B wave, here you can see once it's all said and done, it's easy. A, B, C. Like you get your A wave, your B wave. Sorry, I'm thinking. Okay, hold up, hold up, hold up, hold up, hold up. This is important. Let me take my time here. I don't want to make this mistake. This is important. Um, there is a chance that this isn't finished yet, and you get something like this. That's important. That's very important. Because if I don't say that and that happens, you'll call me a fraud. Remember, I said that. There's a chance, there's a non-zero chance. Obviously, everything's a non-zero chance, but and I'm gonna explain why. There's a possibility, and this is tough. This is tough. I'm trying to read corrective price action. Corrective price action, by definition, is capricious. By definition, it's unpredictable. But here's why I said what I just said. This is my initial break, right? I'm looking at this as being a base. Just simply put, this is what's in my head right now, right? A, B, C, a regular run-of-the-mill flat correction. Let's zoom out so everybody can follow this. This is not complicated, and I don't want to mystify it because it's really not anything special. It's not, rocket science here. Just like you can see here, I have this three-wave pattern. It's, within the three-wave pattern, it looks very messy and busy, but at the end of the day, it's quite simple. It's an A wave that came down. It's going to be some B wave and then a C wave. Now, within those waves, you have some complexity. You have, up and down, and, you have busyness. But by and large, on a higher time frame, it's just a three-wave move, right? That's on a really high time frame. So obviously, I think most people can see that. Now, what was I looking at? Here, if we want to break it down, that's my A wave. That's what my A wave looks like, right? It's a flat correction like this. My B wave now is going to likely look something like that, okay? And we form the base, this base that's taken 100 plus days, 112, 113 days. But maybe we're not done, and here's why. Now, going into the weeds on the smaller time frame, and this is where it gets tricky, right? Because I can tell you that Bitcoin's next big move is back to 103. That's the easy part. The hard part is, how is it going to get there? The hard part is, what's it look like on the daily and the 4-hourly? And I'm telling you that here I need an A, B, C, right? So let's break that down. My A wave, I think, is here. Hold up, let me pull some fibs on here just to make sure that this is legit. Yeah, yeah, okay. It is a legitimate expanded flat right there. Okay. So my A wave of, so now I'm just looking more particularly, and I know some of you may, turn it off at this point because this isn't really important or doesn't interest you, but others of you may find this interesting. This is for those of you who really like this tactical analysis stuff. I'm seeing this as my A wave. My A wave, when it's all said and done, is gonna it's going to end up being this right here. Okay, my B wave, right? It's all fractals. So I'm talking about A wave, B wave within a larger A wave, B wave. That's my A wave. That's my B wave. This is a massively expanded flat. So that in that scenario, we're done because we have A, B, C. But then in another scenario, the more I'm fleshing this out, the less I like the read of my B wave not being complete. I think it's complete. I think it's complete, and I think that you simply get your C wave here. Okay, forget what I said. Forget what I said. I think you do get your bounce here, and your bounce is targeting right now 103. That first stop is the base of this rising wedge, which is previous support, is now going to be new resistance. So if I'm correct, you're going to see a move for Bitcoin coming to around 75K. And at 75K, it's going to retrace 62% and then continue. If I'm correct, that's exactly what you're going to see. All right, so that's Bitcoin. Again, portends really, really bullishly for the rest of the market, because imagine Bitcoin now being en route to 103 from the current price of 63, right? You're talking about a 60 some odd percent move. If Bitcoin's going to do 60 some odd percent, almost 70%, imagine what altcoins can do. So that is Bitcoin. That's my read. That's going to be my read for as long as it takes for that to happen. I don't believe it's going to take that long, because what takes really long when you're looking at an ABC flat or any corrective pattern is always the A and the B waves. Those take up the lion's share of the time in the corrective pattern. The impulse, the capitulative move, like this one right here, take the least amount of time, and they complete the move always. All right, so that's Bitcoin. Now what about altcoins? Well, and I'm gonna go to the other chart as usual, and we're going to have a quick look at what they look like. But you can see here, my others chart has come down, broken this, and come all the way back down to the midline. Okay, so we're getting another midline retest, at least on this chart, right? It looks a little different on different charts. On some charts that have been going for 100+ days, Bitcoin's down here in this area, in these areas. So it's at the bottom of this corrective pattern, all the way at the bottom. Did I say Bitcoin? Altcoins are at the bottom of this 100+ day corrective pattern, right? But you can see on the others chart, it's showing you an aggregate view for most altcoins, or I don't know, a majority of, no, it's skewed with market cap. It's showing you a representation of, you know, the altcoin market. It's not most altcoins. It's like more of a median. In any case, median of market cap. You can see here that breakout. We thought this was a retest of the top of the 100+ day channel. We've now come all the way back to the midline, retesting the midline as support. Another midline retest. Does that invalidate our breakout? No. It just makes it so that we're not as advanced as we thought we were. So we're still now expecting a final move up and out, and then another retest of the top of the channel. So that's where we are with this crypto altcoin move, which you can see on the other chart. But again, every asset should be evaluated individually, and a lot of assets, right? Many assets are doing exactly what you see on this chart, but others, they're all the way down here. Okay, so basically it's the bottom of the bottom that you can see many altcoins are at. If Bitcoin is truly at a bottom itself and likely going up 70% for however long takes to get up to 103K, that means it is truly the bottom for altcoins, and you should expect a massive move of hundreds of percent in a lot of those altcoins, especially those that are on the bottom of their 100+ day corrective patterns. All right, so that's how I'm seeing altcoins. And now let's have a quick look finally at the Bitcoin dominance chart. And you can see here that Bitcoin dominance, for the first time in many, many days, has put in a bit of a green candle. Now, this is a bad thing, because you can see this was very important support for Bitcoin dominance for quite a long time. You're talking about support that had been true since November of last year. We broke down from that support. Now we're retesting it as resistance with this daily candle. I anticipate a continuation to the downside for Bitcoin dominance. All that says is our read on Bitcoin, our read on the others chart is likely true, given that this Bitcoin dominance chart is likely to continue its bearish trend, meaning altcoins at the bottom of their 100+ day consolidation corrective patterns are likely to break out and beat Bitcoin by a large margin in terms of market cap gains. This is consistent with that Bitcoin dominance chart breaking down even more. All right, that's it. Hope this was helpful, useful. Like, share, and subscribe if you got value. Consider my crypto portfolio mentorship and consultation service, where you can trade directly with me your entire portfolio. The introductory meeting goes over your entire portfolio. It's not limited to 5. I have to clarify that, because some people think that I only look at 5 assets. Obviously, you know, it's a 2-hour session, so I can't look at hundreds of assets, but we look at as many as possible and identify which ones are bullish on a high time frame, which ones are bearish on a high time frame. The bearish ones, we try and find ways to get out, targets to get out, where you can sell and not incur any losses. And then we continually track the 5 that you choose and that we help you choose in a balanced way, balanced portfolio in terms of risk and risk assessment and all that stuff, to hold on to for the rest of the bull run, and identify important levels, key levels of support and resistance, where you can trade, you know, carefully with spot those assets. So that's crypto portfolio mentorship and consultation. That's my full service offering, and the link to sign up is the Buy Me a Coffee link in the description below. I also have a single asset analysis service, which is not as comprehensive. It's just, you know, Dean, what's your take on this asset or that asset, this coin, that token? And that is single asset analysis. Make the order and send me the email. And once I get it, within 24 hours, you will have your recording, okay? You will have your analysis. And that is, you know, I've always had it within 24 hours, most of the time within 8 hours. That single asset analysis. For today, I'm not gonna advertise this anywhere else, but if you watched until the end of this video, I'll make it, I'll make a discount on the single asset analysis. I'll make it 100 even. 100 even for the single asset analysis. If you're watching this long and you catch this, you can take advantage of that. And I'm probably gonna let this run. If you catch it, you catch it. Yeah, you know, however long it takes for people to take advantage of this. You know, after I make a few videos after this, people are probably never going to watch this video again. So I'm not going to put a deadline on it, but I'm just going to make the single asset analysis 100 a pop, just because you watched until this moment and where we are in the market and what we've been through. So that single asset analysis. Last but not least, my crypto exchange partners. Right now I'm partnered with KCEX, Weeks, and FEMX. Those are leverage trading platforms primarily. Definitely not something you want to even think about doing if you're not an actual pro trader, if you're not seasoned, if you're not an expert in risk management, because it's extremely risky. But if you are, and you're new to those platforms and want to take advantage of bonuses that those platforms offer new users, they're giving me the full, gamut of bonuses through my referral links. Just click on my referral links for KCE, XFAMX, and Weeks in the description and take advantage of those for new users. All right, again, extremely risky, not for new or novice or even intermediate traders. All right, that's it. Take care. Bye.